I'm Michael Fox, and this is the Prospector News Podcast. And I have joining me the junior miner junkie, David Erfle. Welcome, David.
Thanks, Michael. Great to be back.
Yes, it's good to have you back. Month of August, we uh, we've seen a strange seasonal pattern this year because normally the summer months are doldrums, but we saw a strong metals market in July, and then it completely slammed on the brakes and went back full reverse in August. What's going on there, David?
Yeah, we had a whipsaw. We saw on the very last day of July when the monthly close was happening on a Monday. Gold futures. Well, the first of all, the gold futures contract went from switched over from August to December, the Friday before that last Friday in July, and so we saw a huge move up in from the December futures from the spot price. It was about a $40 difference. So that dichotomy basically took the gold price uh, over $2,000 on a monthly basis close at the December contract for the first time in history on July 31st. So, a lot of people were waiting for that, myself included. And we thought those gains were going to hold and basically were faked out. And as soon as the calendar turned to August, I think the first 14 trading sessions, gold was down 13 of them and went down to nearly test 1900 in futures again. The spot price went below 1900, but the futures price is still trading about $30 above the spot price. So we had uh, basically a test of the rising 200-day moving average in gold futures, which was around a little above 1900. It's about 1910 right now, and it's risen up now to test what was strong support at 1950 is now resistance. So that's been taking place. And it's been taking place as the dollar continues to move higher above its falling 200-day moving average, and it's testing resistance around the DXY is testing resistance around 104. So it's really been interesting what's happening in the metals market in respect to silver in particular, because the silver price, is usually the most susceptible to a rising dollar. Silver usually gets hit pretty hard as the dollar is rising pretty strongly, and the silver price last Wednesday went up over 4% on Wednesday, and as the dollar was remaining strong, and those gains are being held. I mean, we had a huge move up to resistance at 2450 in silver, and a lot of that was short covering. There was a lot of short covering involved there, which usually, that short covering comes off afterwards after a price spike, but those gains are being held and they're being flagged. So while the dollar is remaining strong above that 104 area, so it's really interesting how that's shaken out.
Yeah, definitely. I jokingly refer to it as the silver lining in the gloom of summer, but um, I can't see a reason for the disconnect between the gold and the silver price. Can you?
Yeah, I think it's China, backstopping their economy by with more stimulus, and because a lot of people are worried about the China slowdown. It's hurt copper, and the silver price is basically being held up by its industrial component, thinking that there's going to be more uses for silver industrially. I mean, if you take a look at the gold silver ratio, it's now moved back down to that 80 level, which is a very key level. You know, that gold silver ratio has been, fluctuating above 80 and below 80, a little bit below 80 for a while now, and it needs to get below 80 and start trending below 80 and possibly below 70 until we get a sustainable move in the gold price. Because if you take a look at silver, it has historically led the gold price in both directions, along with the miners. The miners and silver kind of trade together, and they usually lead the price lower and usually lead the price higher. And whenever you're having a strong correction in the gold price, where we had recently, the bullish thing about that correction is it was happening on sinking volume. You know, we had the move in July took place on rising volume, which is bullish, and then we had the correction of that move on falling volume, which is also bullish. But we also had the silver and the miners leading the gold price lower, which was not bullish. But when silver began to bottom before the gold price recently, that started to bring some bullish momentum back into the mining sector, and the miners have now joined silver and have started to lead the gold price a little bit here. So, you know, the gold price needs to get above 1950 on the futures contract, and especially above 1980, I think. And the silver price needs to get over $25. 26 would really be nice for the move to really get going here. But you know, this is the last week of summer doldrums, and there's not a lot of action, not a lot of volatility. A lot of traders are still on vacation. You know, they're going to start coming back after next week, after the Labor Day weekend, and then we get into conference season, and we'll have more press releases from mining companies coming in. You know, there's just not a lot happening right now. This is typically the last week before Labor Day is typically one of the slowest weeks of the year, besides the Christmas week. So I expect to see interest pick up next week a little bit more, and then once we get into the Beaver Creek conference on from September 12th to the 15th, that's when you're really going to start to see a lot of news releases come from these companies.
Yeah, it's been crickets out there. The companies have been very quiet, and strangely, they are lamenting the fact that their share prices have been lagging behind because of it. And you know, you talk about Beaver Creek, but you know, there is seasonality in our business, and the seasonal calendar says that we should be in the doldrums. We should have been there in July. So it's been a bit of a strange summer that way. You know, we always, you know, mark around the 15th of September is kind of the end of the summer doldrums for the commodities. Do you see that as being the case? We kind of sort of will have that kind of normal climb back out around that period of time?
Yeah, I think so. You know, you're talking about seasonality. Gold has that strong period in the second half of August until the first week of September, and we got it a little. We're getting a little late, but it is starting to happen now. But the futures price, you know, maintaining that really high premium above the spot price, that's bullish as well. I mean, that is telling you that there's a lot of investors out there buying futures contracts that are expecting the gold price to break out sooner rather than later. You know, it's been threatening to break out above that 2000 to 2100 level for the past 3 years, while 2000 has been that really strong ceiling going back almost 13 years now. So, you know, once that $2,000 becomes starts to become a strong floor as opposed to a strong ceiling, that's when we're really going to start to see the benefit in a lot of these stocks. But you know, that's not happening yet. But what has been happening is the inflation has just been making everything so much more expensive for miners and for explorers and for developers. While the gold price has gone sideways and the stock market has remained strong, there's just been no interest to go into gold stocks, and especially into juniors. If you take a look at the stock chart of the world's largest gold company, Newmont Mining, which is about to become uh, the world's twice biggest gold miner compared to its next competitor, Barrick. After the Newcrest deal goes through, they cleared another regulatory hurdle last week, and it sure looks like that deal's going to happen. And then when they become basically in a class by themselves as this gold behemoth, that's the stock that everybody follows, and the generals will start going into, once this worm finally begins to turn in the mining space, and that hasn't happened yet. Matter of fact, gold, the Newmont was trying to hold support there around $40, and it lost it here last week, and it continues to go a little lower. It's down over 50% from its peak, over $80 last year. So that is definitely the stock to watch, because I mean, if Newmont continues to sink lower, that's the bellwether for the mining sector. Then the juniors aren't going to get much love until the majors do, and we need to see that generalist interest come back into this sector, who they basically left about a decade ago, and they haven't returned, which has been a big reason why a lot of these stocks can't gain much traction.
Yeah, there is a disconnect between the actual miners and the actual commodity. Like if you went back to around 2008, 2009, the last time gold was trading at $2,000, the miners are all trading at highs as well. And that's one of the things I'm finding the generalist investors having a hard time wrapping their head around, is that, the commodities like this, how come the stocks aren't? And I'm wondering if that's part of the cause of the disbelief in the sector.
Well, yeah, I mean, like you see, your dates off a little bit. 2008, we had that major bottom with a spike low with the global financial crisis in the gold price. At that time, it was trying to get over $1,000 an ounce and stay there. That was the number that was causing some difficulty. It ran up to $1,000 in late 2007, and it took about a year to finally get over it. And what finally got it over was after the global financial crisis. The Fed had to come in and bail out the entire banking system, and then the gold price took off, and once it had a monthly close above 1,000, it never looked back, and it ran from $1,000 in late 2008 to 1925 in September of 2011, and that's when we had the blow off top in the mining stocks as well. And like you said, the GDX and the GDXJ, GDX is trading 50% lower than that point when the gold price first cleared 1900, and it's trading at about that price right now. And the GDX is 50% lower, and the GDXJ is 75% lower. And a big reason for that is because all this inflation has not helped the gold price. It's gone sideways, and it's really hurt all the miners, because everything from getting the drilling for the gold, to getting it out of the ground, to building the mine, everything is costing so much more. And also you have to add in the fact that when we had that peak back in 2011, what were the miners doing? I mean, the miners were going out, and they were buying all these low margin bulk tonnage projects by scooping up these juniors that needed higher prices for their projects to be profitable. But everybody was thinking that the gold price was going to go over 2,000 and stay there. And never, first of all, it never reached 2,000. And second of all these projects needed the gold price to be over 2,000 to be economic. They weren't. It didn't. And the miners used their stock to purchase these companies. So that's dilution. So you add in all that dilution, and that's another reason why the GDX, the GDXJ are so far below where they were the last time they were at 1900 back in the gold price was at 1900 back in 2011.
Yeah, they did have a tendency to run around like drunken sailors and overspend on a lot of projects during that period of time. And they eventually, another 5 years before they throw in the towel and start doing the write downs on them. But it's, the M&A this time, it's, they're deals like the Newmont one that you just alluded to. They're deals that make sense now. They're not, deals for the sake of making a deal.
No, they're very cautious now. They're very cautious of their balance sheet. They're very cautious of of their cash flows, because the inflationary environment has made them more cautious about making sure they're going to make a profit getting that gold out of the ground. And um, and they're paying dividends now, and they've paid off their debt. Their balance sheets have never been healthier, and a lot of these companies are paying 3, 4, 5% dividends. The Newmont, the largest company that we spoke about earlier, it's paying an over 4% dividend, and their balance sheet is very strong. But eventually they are going to have to replace reserves, and especially these mid-tier companies. I think that's where we need to see the M&A really take place, because we've seen a lot of these majors gobble up other majors, which this needs to happen to attract the generalist investor. But we need to see more M&A in the mid-tier space, and we need to see a lot of these juniors that have been de-risking these projects. It's really interesting, because a lot of these juniors that are de-risking these projects, several of them have been de-risking multi-million ounce deposits for the past decade or so. And since the last, we had a major bottom in late 2015 in the mining space, and at that time the gold price was trying to hold above $1,000 an ounce, and we had this major bottom in the sector. And a lot of these companies were trading for pennies on the dollar, but they had yet to de-risk their projects to multi-million ounce deposits at or near the finance stage. But a lot of these companies now have done that, yet their stock is back trading at those same prices they were back in late 2015, early 2016. Sure, there's been dilution, but that's been necessary. These companies need to dilute to raise money to de-risk these projects. But now now that the gold price is threatening to break out above $2,000 and stay there, but a lot of these stocks are trading at share prices that are basically the same price they were back in late 2015. And yet now many of them are at or near the finance stage. Some of them are even being built or shovel ready, yet the market is valuing them at $10, $15 an ounce, and sometimes even less.
Yeah, there is an awful lot of really undervalued companies out there. The TSX Venture, it dropped to the low for the year, by a point, but it was still the low for the year, off of the
Right.
low, which occurred in the first week of January, and the share volume has been negligible. So
Oh yeah, it's the
it's
share volume in the venture is the lowest it's been since the turn of the century, when gold double bottomed at 250. That's how the volumes continue to get lower and lower, because it's just sector apathy. Nobody cares about gold stocks. Nobody cares about juniors. And this is the time that your inner contrarian says, hey, this is when we need to be accumulating and holding. And if they go down 20, 30, 40% from where I've accumulated, it's okay with me, because I understand what is going to happen once the gold price makes a strong floor at 2000, after it being a strong ceiling for the past 13 years. That might take several more months, but as far as I'm concerned, I'm pretty confident it's going to happen. I've been through this several times, and I know you have too, Michael, where
yeah.
we've accumulated stocks, in these really dreary periods where everybody hates gold stocks, volumes are really low. uh, the juniors, quality juniors are being thrown out with the lifestyle junior bathwater. But normally, when we have times like this, it's when the gold price is threatening to break down, not when it's threatening to break out. That's what makes this time very interesting and very different. And also, usually you see the financing windows close tight during periods like this, and they are pretty much closed tight for a lot of these lifestyle juniors that need money. But for quality juniors that are de-risking quality projects, the money's there. You're still seeing a lot of these big financings take place, and some of them are even taking place without them having to issue a warrant. That's how strong these projects are.
Yeah, it's, but the cream always rises to the top. That's always kind of the way it's been. When things are bad, the good companies can still raise money for the projects.
Right. Great projects will always get financed. Right.
So I was going to ask you, and I think you just answered the question, but I'm going to ask you anyways. Stocks versus the commodity. Are you more bullish on the stocks going forward, or the commodities?
Oh, absolutely. It's, when you take a look at some of these valuations on these silver juniors and gold juniors, it's really laughable. Um, as far as what their market caps are and how much gold they have in the ground in top tier jurisdictions, and they have access to capital, and a lot of these management teams, they've done the right things, in a bear market. They've raised money when their share prices were strong. At the time, you see a finance come out of a for a company, and you really, you're a shareholder and you like the project, and they have some money. They don't really need money, but when they're offered money, they take it, and that's what you do. Sure, it hurts at the time. The dilution hurts at the time, but maybe this happened 3 or 4 months ago, and at the time you're thinking, oh, why are you doing this? Well, now it turned out to be a pretty smart thing they did this, because their share prices are even lower, but they raised that money at a higher price. And it's nothing that management has been doing that has been the reason for these stocks being sold. It's just impatient investors that each time the gold price has gone up toward that $2,000, every time it fails, these people lose more and more faith and sell their stocks. And at this time of year, tax loss selling, even when good news comes out, it's used as a liquidity event to dump their shares for tax loss. So, it's investors giving up. And when investors give up on quality projects, that's opportunity. As long as you don't do it with margin, and you're using money that you're not going to need for the next couple of years, accumulate, when it's painful. That's how you make money in this sector. You don't accumulate, when everyone's jubilant and the stock's running higher. You accumulate when it's going lower, and it takes a special kind of a person to do that. But that's what you have to do in this sector to make money. You accumulate fishing lines and then you sell rhino horns, but you just make sure that you're accumulating fishing lines in the quality companies, and not the lifestyle juniors that aren't going to that are basically padding their salaries, and they're not going to put that money into the ground as far as exploration is concerned.
Yeah. Last time we spoke, we talked about the gold price being in the blocks and what was it going to take to break out of that box. The question I have this time is similar but different. I'm of the belief that there is going to be a precipitating event that's going to cause the generalist investor to come flooding back into this sector. There is just too much capital sitting on the sidelines looking for opportunity right now. And I'm going to ask you, what do you think that catalyst, event is going to be?
Well, a catalyst could be centered around the Fed, because the Fed's modus operandi during these, rate hike cycles is basically keep raising until they break something. And these treasury yields going higher, and the Fed funds rate going higher, squeezing everybody who have debt, and who, it's the 2-year treasury yield has already reached 5% again, and the last 2 times it reached 5%, in 2008, it caused a global financial crisis, and in March of this year, it caused a regional U.S. banking crisis, which juiced not only the gold price, but the gold stocks had a really strong move coming out of that. So, I think it's going to be something along those lines, or it could even be geopolitical, which is what we don't want to see. The gold price breaking out above $2,100 and screaming to $2,500 on fears of World War III is not really a catalyst that we want to see, but that is a possibility. And but if that takes place, gold stocks are stocks, and they're going to get hit. They could get hit even more along with everything else before they go higher. So that those are the catalysts that I see happening, that could eventually break the gold price out. And it's usually something that the Fed does that breaks something, and I think that's probably what it's going to be.
I just to quote somebody about the World War III thing, you should never bet on the end of the world because you're only right once and you can't collect from anybody.
Right, and you can't eat gold.
That's true too. So if people want to follow your analysis of the markets, how would they get a hold of you and follow you?
Yeah, it's JuniorMinerJunky with a y.com, and I put a sometimes weekly column, usually weekly column out on Kitco. I've been skipping a few weeks lately. I had some health issues, but that comes out every week on Kitco every Friday morning. I'll probably write one this week. I didn't write one last week's, but you could find me there also.
Wonderful. I look forward to picking this up again at the end of September when we've had another month behind our belt, and let's circle back and see how the markets are going then.
Sure thing, Mike. Always great to talk to you.
Thank you, David. The Prospector News Podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.